Same old guys. Bitcoin chopping in a channel sideways. I can't really show it on this stupid chart that I'm using on Coinbase, but we're chopping in a channel. Oh, there we go. The 1 month kind of shows it. You see that? Just sideways price action going on for like literally weeks now. So that is tradable if you want to trade it. I'm not. I mean, if you buy Bitcoin directly, yeah, maybe you got to be willing to hodl it for the next 2 years before the next halving. Uh, could get a bump, who knows, higher. Probably will, actually, come to think of it, the way it looks. But if it does, take profit. So I'm saying it could get a further drawdown. And what I'm seeing on the chart is I'm still waiting for a back in here somewhere, right? In the 60 to 70 range. That's what I'm seeing. So in the meanwhile, what I've been doing is I was averaging in buying shares of Blocks, which is a Nicholas fund that holds, or X funds that holds a bunch of ETS associated with Ethereum and Bitcoin, including miners, I believe. Also, in response to somebody's question on Facebook, what I was doing. Oh, that's a stupid video I had earlier. Hold on, guys. God damn it. All right, here we go. In response to somebody's question on Facebook, what they're doing on Mara, or if anyone's trading Mara, I said, yeah, I'm basically selling $5 strikes out to January 2027. Like I said, at a $5 strike, I got 5 contracts that I've done so far, and my average premium receive. Look, I didn't know how to spell average. Look at that. Anyway, yeah, I received $101 per contract going out to January next year. So on a five strike, if you know anything about options, you're leveraging 100 shares for each option contract. So if it's a $5 strike, that represents $500 because you multiply 5 by the number of shares per contract, which is 100. You've got a $500 leverage, and getting $101 on the out of the money put is extremely nice because that's well over a 10% return. That's like a 20% return within a year. I'm fine with that. Even if I get a sign, I'm like, of the Bitcoin miners, Mara and CleanSpark, they're not going anywhere anytime soon, not even after the next halving, not until all the Bitcoin have been mined. And at that point, they'll probably be data centers. They'll probably be in the AI trade to a certain extent at least. So they're already starting to make that pivot. Now, I'm not a firm believer in the virtues of being an AI data center or anything like that for these Bitcoin miners. I don't see a huge margin of profitability in that because they got to outlay so much capital to build out these AI data centers, and that's why you're seeing a pullback in a lot of that type of sector in the market anyway. So with that being said, I'm just trading them because they've been some of the best trades in my life. I'm like, the last couple of years, back in before the last halving, I was trading Bitcoin miners, and I recovered I was down in the market back in 2021 to 2022, and I gained back like 50% of my freaking portfolio just trading Bitcoin miners and proxies for Bitcoin. They didn't have the ETFs yet, but I was trading the one out of Canada, what the fuck is that, Grayscale, something like that. I traded that one and added like a 2x on it, and I made a bunch of money on the miners too. So during these pullbacks, the Bitcoin miners are my proxy for Bitcoin. Bitcoin's not paying me anything for options or anything unless you're doing futures, and I'm not doing that. So I just trade the Bitcoin miners during pullbacks. Also, I've been trading Bull lately, which is, Bull's the ticker symbol for Webull, selling $5 strikes out to January 2027. I've received over $70. I forget how much it was, but it was over $70 for the contract that I sold. I'm not real bullish on Bull per se, because there's other brokerage firms that are probably doing better, like Robinhood. But what if Bull has the same kind of catalyst of growth that Robinhood has had and goes up exponentially? That's always a possibility. But in the meanwhile, I'm limiting risk by selling way out of the money strikes on it out a year in expiration. And I'll take that risk. I'm fine with that. My dividends pay for this anyway. So on the dividend income I receive, I trade options when I don't need the money. If I don't need the money, I start trading options. And I've got a cash portfolio for that too. So it's good to do a little bit of everything, I think. So I got a cash portfolio for trading options. I got stable funds like SGov for stable income waiting for a turn in the market where I can buy the dip. And then I got my holdings and stuff like QQQI, from NEOS and some of the other NEOS funds, amongst other funds that have really great NAV stability and a great overall return, total return over time. And so that's what I'll look for. And I'll look for diversity too. But anyway, I'm kind of digressing. This is how I'm trading the Bitcoin pullback currently. I'm averaging into selling cash secured puts for income. I even bought a call option on CleanSpark. I got 2 contracts that are underwater currently, but I'm waiting for that 60 to 70K range on Bitcoin. If it strikes, that's where I'll average in more contracts. If not, well, I'll sell puts continuously to pay for my losses on the call options. And I'm actually up on that end of it if you think about it, because I made a few $100 over costs, I think, with all the contracts I got, because I got contracts in CleanSpark, 5 contracts on Mara, contract on Bull, and I'm doing options monthly too. So I'm making up money that way. So if I'm losing on my call options, I'm making it up on the options that I sell. All right, guys, be cautious out there. This isn't any kind of financial advice. This is just how I'm trading the Bitcoin pullback and the consolidation you're seeing on Bitcoin. I don't know where it's headed from. It could break down further, and that's really what I'm looking at, 60 to 70K range. If it hits, that's where I step in aggressively, buying more call options at that point, because I would expect a bounce at some point, especially going to the future halving in 2028. I'm going to be positioned to trade something more relevant to Bitcoin's actual price, which would be a spot exchange traded fund. Spot price of Bitcoin exchange traded fund like IBIT, one of the more liquid ones, IBIT basically, instead of the miners. So I think the catalyst for the ETS going higher at the next halving is definitely more favorable for them to go higher than it would be for the miners. The miners are going to keep on shrinking in profitability because these halvings are going to create a harder and harder situation for these Bitcoin miners to really profit going forward. So you got to keep that in mind. All right, guys, take care. Bye.